Hello, ladies and gentlemen. It's Adel Hanbali with you, student of the Florida National University, and welcome to the last video for this course. Video number 7 for assignment number 7 about the last two chapters of our book named Using Budgets for Planning and Coordination and Financial Control. The company I chose to analyze for this course is Dentsply Sirona, which is the world's largest manufacturer of dental equipments and products. So starting with the first chapter about budget. First of all, what is budget? Budget is kind of, in short, it's a spending plan. Without having a spending plan, we risk entering into high debts because we will not have a ground on how to spend our money. It's similar to the concept of having a clear business purpose, because without a clear business purpose, we can plan. With budgets, based on the budget that we set, we can make our plans to achieve our goals. And we can play with the budget to ameliorate certain performances in the company and focus more on some other. Now, budgets have several elements, and one of the elements of the budgets or the resources that in the intermediate and long run enhance the potential of the company's strategy. Those kinds of expenditure or profits are not really needed for the company to operate, but in terms that they will only, that a company can work without these expenditure. However, with these extra expenditure or cost, the potential of the company increase in terms of profitability. They include, for example, training. And in our example of Dentsply Sirona, a very clear example of this kind of cost that is included in the budget is the R&D cost, the research and development cost. The research and development cost is the cost needed to provide new products for the customers of Dentsply Sirona, knowing that Dentsply Sirona is very committed to innovation and to providing the latest technology in the dental industry and with high quality products. So the R&D cost enhances the potential of the company's strategy. It is considered a discretionary expenditure since it enhances the performance potential. And then Dentsply Sirona, the company is committed to innovation, as I informed you, and this R&D cost is part of the selling and general and administrative expenses, which Dentsply Sirona in its annual report of 2017 reports that it was $151.7 million. Now, other than the budget, the second chapter is about financial control. The financial control is, and here we are interested in the extrinsic financial control, since the external financial control, because the internal financial control is not accessible to the public. It is only used by internal managers to focus on certain aspects of the business and thus improve the performance of these aspects. Whereas the external financial control are used by the investors or by financial analysts to see how the business is performing as a whole, and based on this, they can choose whether to invest or not in this company. Some financial information that are part of the external financial control are, for example, the net profit of the company. The net profit of the company, or the operating net profit of the company, is also known as the residual income, which is all the money that we have, or all the profit that we have after we paid all our bill. What we have at the end of the year after we give back, or we paid all the bills, basically. And residual income, unfortunately for Dentsply Sirona in 2017, was negative. Dentsply Sirona had very high expenses in goodwill impairment and in reconstruction cost, which made the residual income negative, and Dentsply Sirona recorded a loss of net loss of 1.55 billion. And this is not really attractive to investors nor to banks in case of Dentsply Sirona wanted to have or take a loan from the bank, because the bank will not trust Dentsply Sirona that it will be able to give back the interest on the loan and all the loan in general. However, a company as big as Dentsply Sirona, they know the potential of the company, and they know that this was due to goodwill impairment, which was not the case, for example, in 2016. And so it's a very, we can say it, we can call it a very special case that happened to Dentsply Sirona in 2017. The cash flow statement. The cash flow statement is a very important financial statement in management accounting, because cash is very important for the company. Without cash, we cannot operate, and thus we cannot succeed. So the cash flow statement reveals all the cash transaction, the inflow cash and the outflow cash that happened within the company. And the good news is that Dentsply Sirona, the cash flow statement of Dentsply Sirona revealed that it had an acceptable amount of cash, even though it had a net loss in profit, and this was equal to $320.6 billion at the end of 2017. Basically, that was it for this video. Thank you for taking your time watching my video, and that was the last video. Thank you for watching my videos.